Hey, what's up guys? Gman-crypto here. In this video, I will be covering the following. What is divergences? How to spot divergences using price action and indicators. How to use divergences for better trading opportunities. So let's hop onto the charts to find examples of divergences and how to trade them. So what is divergence? Divergence is when the price of an asset is moving in the opposite direction of a technical indicator such as the RSI. RSI is a great indicator to spot divergences and possible trend reversals. So what is the RSI? The RSI is a momentum oscillator that measures the speed and change of price movements. As per my hourly chart on Atom, we could clearly see that price action has been forming higher highs, while the RSI indicator has been forming lower highs. And that was good indication of possible bearish divergence or trend reversal. So my first rule when looking at the charts is to establish market structure. So looking at Atom on the 1 hour, we can see that Atom has formed a new high, a higher low, a higher high, higher low, higher high, higher low. And that is confirmation that Atom is currently in an uptrend. So what is my second rule? My second rule is finding support and resistance on a higher time frame. For me, that would be the daily chart. So let's hop onto the daily chart to find our support and resistances. So on my daily chart, I like to find my key levels of support and resistance. So with my horizontal tool, I'll mark out all my support and resistance zones. So I'll go with that one as a daily resistance. I'll go with this one as well for daily. I'll go with this one. No, I'll go with this one as my daily support. And this one as well for my daily support. So once I've established my support and resistance, I will jump back over to the 1 hourly chart. And there we go. Now that I've established my support and resistance, am I looking to take a possible trade here? No. Reason for that is we are currently trading between our daily support and our daily resistance. A good indication for me is that we are trading above my 50 EMA. But to take a trade at this point, it wouldn't be advisable, as based on the current market structure now, we are currently forming lower highs and lower lows. So this is a possible trend reversal. Price action has bounced off my daily support. Am I comfortable taking a long in this position? At this moment, no, I'm not comfortable. And the reason for that is that this area, if you look to your left, has acted as resistance multiple times. There we go, once, twice, thrice. And based on price action, we're currently testing the zone again. So what I would love to see is a break of the zone, retest, and then firing a potential long with the first take profit at our daily resistance. So bear in mind, I haven't looked at the RSI as yet. That is only waiting. I'm waiting for certain confirmations to establish whether I'll be taking a long or a short position. So if I play the markets further, let's check. The next candle was a very impulsive move to our daily resistance. For that reason, I will pull out my RSI. If I look at the RSI, we are almost in an overbought position. And based on that, because we are so close to an overbought position and we're close to our daily resistance, I am not comfortable taking this long position at all. I'd rather wait to see if there will be a possible reversal to the downside, or if we will see divergence appearing on our RSI. So let's play that again. There we see a rejection again from our daily zone. RSI is moving down. Do we have divergence? Yes, we do. There you go. Price is making a high, higher high, while the RSI is making a high and a low high. But this is not my confirmation as yet, and this is where a lot of traders get trapped in these divergences because they're taking the aggressive approach. So we need more confirmation as to what's going to happen next. So I'll pay for the next candle. As you can see here, we are sloping back up. Still have not received any confirmation of a strong pull to the downside or to the upside. Then again. So now, based on this, we will see divergence is still playing out, still forming higher highs and higher lows. But I still will not take a short position at this point, as we are still above my zone, which is now support. I would like to see a break of the support for continuation to the downside, and that will be my confirmation of the divergences playing out. And let's check again. So a bounce from our support, another candle up, again. And their price has formed now another higher high. So our divergence is still, there is still a possibility of divergence playing out here. So I will now extend my trend line on the RSI as well. And I'll wait for further price action to confirm it. So here we have divergences playing out. Extend my zone. Here we have a break into the zone, touch of the zone. So we either would like to see a move to the upside or a break of the zone. Once the zone is broken at candle close, based on my rules, that would be my entry position. Play again. So my confirmations to confirm that this is strong bearish divergence is that we have bearish divergence at our daily high time frame resistance. We saw a rejection to the downside from our daily resistance. We had a test of the zone, bounced up, and now it broke and candle closed below the zone. So that for me is 1, 2, 3, 4 confirmations that we could see a potential continuation to the downside. But based on my rules that I had in place, based on this candle closing below my zone, that would be my entry for a short position. So if I take the short position tool, my entry would be at candle close. Stop would be above previous high. And based on this chart, I would go for about this area. I'll explain that to you now. So now that we have continuation to the downside, all my conditions are met. I've placed my order. Stop is in place. Now I need to determine where my take profits would be. Most of my take profits will be based on the hourly support. So looking left on the chart, we've broken that support there. So my next support would be above. Our next support would be at our daily. Let's remove that. Our next support would be at the daily. Here we could see that price was rejected and acted as support as well. So that would be my second take profit. My third take profit will be based on this one. That support there and resistance. Right? Because we can see here that we got a bounce from this point. We got rejected here at that resistance, broke through our support, saw a bounce at our daily, continued to the upside, and then we saw a rejection from this resistance as well. So that would be based, my take profits will be based on that. So if, let's say, I would make this one my first take profit, that one my second take profit, and that would be my third take profit. And then my fourth take profit will be based on this daily zone. As we could see, that we got a bounce off this zone as well. So let's play the market and see what happens. As you can see, we're moving further to the downside. Take profit 1 is hit, take profit 2. And we saw a continuation to the downside. We just broke the third support. And there, boom. That was a successful trade. The risk to reward ratio was 1.8. So that is a good example of finding these divergences at key levels of support and resistance. A key thing to look out for when looking out for divergence is based on the RSI. Where is this divergence happening on the RSI? On the RSI, we would like to see divergence happen either at oversold or overbought areas of the RSI. Another tip, I know a lot of guys say that they never saw the divergence because it was so close to each other. There's one thing I like to use on the RSI is just by using the mouse cursor, or so just hover. If the RSI, in a case like something like this area, in a case like this, all you need to do is keep your cursor at the point and it will give you the reading of the RSI there. So let's hold it there. So that one is giving me a reading of 24.49. And if I keep my cursor at the next one, it will give me a reading of 26.26. So based on that, this is 24 as 26. So if it's like tight like this and you're not sure if there is bearish or bullish divergence happening, you could always just use your cursor to find that out. Another tip that I like to do with the RSI is also use a horizontal line. That way, you can also establish that if this line was broken to the upside, then divergence would be invalid. So this was a good example of bearish divergence and the rules you need to have in place to build a rules-based strategy. I've used this as an example because this was actually a trade that I took. I think it was in March the 4th or 5th, if I'm not mistaken. Yeah, March the 4th. And that was exactly the thought process I had behind that trade. So what was my rules? My rules was market structure, number one. Number two, I needed to establish key levels of support and resistance. Number three, based on price action, I was looking out for possible reversal or divergence. Rule number four was that in the event of a reversal, I would like to see a break of my zone and a break of my 50 EMA, exponential moving average. So guys, it's very important to have these conditions put in place. If one or two of those conditions was not met, that trade wouldn't happen at all. Unfortunately, we didn't have time to go through a bullish scenario, as I don't want this video to drag up too long. So guys, if you would like me to cover any other indicator or strategy, please feel free to contact me in our Discord group with your suggestions, and I will create some content based on your replies. Peace out. Gman-crypto.